All right, welcome to the show. So I'm here with Mathew Monks, our financing partner for our investors and our clients. Mathew is a lifelong athlete, has always held a passion for business, competition, following his completion of his economics studies at Wilfrid Laurier. He's from Guelph. He swiftly assumed the role of head research development of JJ Barnaky and Whitney. Concurrently working full time, he pursued real estate courses and initiated his career as a commercial real estate agent at DTZ Barnaky and Waterloo. Eventually, he secured a coveted position on Canada's premier land acquisition and development team. He's got years of schedule and stringent deadlines. I'll cut that one out.
You
He's
might
got
you
years
want
of experience with valuable insights into the strategic strategies employed by top brokerages, distinguished themselves in a competitive market. So, Mathew, introduce yourself. Tell us a little bit about yourself, how you serve the community here, and let's dive in.
Sure. Yeah. Thanks so much for having me, Sam. It's a pleasure for sure and an honor. But I guess at the end of the day, I'm a real estate professional. I've been in real estate since I left university. I was really lucky, right out of university to be a part of the Barnaky Whitney team in Waterloo, and just really got started there. And from there, worked in real estate for the last 17 years, whether that's been as a commercial broker or as I am now as a mortgage agent, or also in the development side of business. So it's always been a passion of mine, and it's been in Guelph ever since. That's where I am today. So thanks for having me.
Yeah, thanks for coming on. I know I definitely want to dive into your story. I think you have a really great experience with your experience in development, financing, the builder consultant, and in the commercial world. How has that shaped your business now when it comes to being a part of Barnaky Whitney, you mentioned, and being in the commercial real estate world, and it helps
Yeah,
investors?
I'll be honest with you. When I kind of look back at it now, it was a substantial amount of time ago. But you I would call myself a kid. Really, you just kind of you leave university and you're kind of thrust into this position, and it's your first real job. And it took me what felt like forever to get so many interviews, but you don't realize the people that you're around. And I'm not going to name drop, but if I would to physically walk myself through those halls, it's really some of the major decision makers and game breakers that have been in this Tri-City area in the commercial side of the business, even to this day. So certainly that commercial environment was an interesting one, because it was that red hot real estate environment that led up to the subprime mortgage crisis in 2008. I'm sure everybody's familiar with that, and obviously the Steve Carell movie, and then thereafter, right? So what we kind of see, what is similar to now, where we're kind of bouncing back. Is it a recession? Is it a depression? We're not entirely sure, but I guess to really sum it up, it was sort of a pressure cooker for me to really get in there. There wasn't much time to settle. You worked all day, every day, learning, doing as much as possible, and I had nothing else to do but work, and that's all that I did, and I probably learned the most in the shortest amount of time, and I'll always be thankful for that opportunity. Yeah, I was lucky.
Thanks for sharing that. That's incredible. So, it's been definitely a big journey in getting there. A lot of learnings, like you said, in the commercial world. You're also the owner of HuronMortgages.ca and HuronDC.com, right?
I am, yeah. So Huron, Huron Development Consulting, which is HuronDC.com, kind of started out of a whim. It was when I was getting healthy again, and maybe we get into that a little bit later. But it just came from a relationship that I had with a couple of the builders here in Guelph, who knew that I was recovering, and my health wasn't really where I was at, but I was still capable. I just wasn't able to get out and about. So I needed sort of a landing place where people could go, and it could be a hub of information. And that's really what started Huron DC, or Huron Development Consulting, and it still thrives to this day. It's probably about 15% about of my time occupied to that. But they're the same clients, right? So these are long-term clients, not transactional clients, really relationship-based clients. Um, yeah, and then in addition to that, Huron Mortgages is more recent. It's underneath the Mortgage Intelligence umbrella, which is one of the big three mortgage companies in Ontario. And I'm happy to be there. I'm well into my second year. I was licensed before with Dominion Lending prior to getting sick again, but yeah, happy to have Huron Mortgages. Really fresh look on things. We do everything. We do land, we do residential, first time home buyers. We do the commercial side. Last year we did way more commercial than residential. It's just been really exciting. It's been really exciting to have kind of a fresh look on something, and that's what HuronMortgages.ca is.
Yeah, I see what you mean. There's definitely a lot to unpack there, especially with your experience as a builder consultant. And you mentioned a hub of information. How does that help investors, your clients, when it comes to financing deals, when it comes to your pillar of being a builder consultant and helping finance these deals, or helping put, understanding the knowledge of property and land, and being able to, how does this business serve the investors, and how does that hub of information help investors that you have right now?
Yeah, I think they're all really different. I think that that's probably one of the things that I enjoy the most about it is each of my clients is a lot different than the other. They all have their own background. They've come from different walks of life, different careers. Some people are, legacy developers where their family's been in it forever. Others have come out of one career and gotten into it and really enjoyed it. So the scope of work is first figuring out where they are on the spectrum of how much do they know and what are their goals. So if their goal is just to make money, or if their goal is to own something long term, or you really just want to identify what those goals are, and then from there, just putting together a platform where we can identify, all the expert advice that they need, regardless of what asset class or what geographic location or total spend. Yeah, it's just a one-stop solution for anyone who's wants to get involved in the business but doesn't know where to start, and it's tailored as opposed to some of the other, like our competitions, the big four, the big five consulting. They sort of tell you. We just ask and help you along.
So it seems like there's builders of all stages of that journey of, big builders, people who are just getting started. Are you noticing right now a lot more people getting into the building space, whether it's infill, whether it's land development, and how has that landscape changed when it comes to real estate investing and people looking at that as an opportunity now?
Yeah, I think before COVID, I think it was a really attractive market, and a lot of people were jumping in. And then COVID hit, it was difficult, and then we've had the correction with the interest rate. So there's been a lot of apprehensive in regards to new people coming into the market. I think that it's really geographic in regards to this supply and demand. I think that my evaluation of Guelph is going to be, completely different than London, than Toronto on the same day of the week in sort of a macro monetary policy evaluation. So as much as they say location, 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 it really is. And so if you, to answer your question, I don't know how much opportunities are in Guelph, and that's simply because there's been really the same players here for 30 years, and they've been able to continue to be major players. In Guelph, it's a different story than KW. Listen, KW, there was just a big announcement, in KW. There's land is available. We see what's going on with the lines for the cities. So completely different environment. So I think it's where you're located, and your ambition. So yeah.
Yeah, and I like that because you have that commercial experience in real estate, which I think there is a lot of people looking at the commercial side. Land development kind of synergistic with that, and a lot of things in Kitchener are changing, like you said. that old Schneider's building that was sold, that's going to be developed. Lots of people selling, land banking, multiple properties side by side and putting them up for sale and doing rezonings and all that. If someone's, let's say, getting started, they want to understand how to get into land development, commercial investment in real estate. Why is it important for them to consider it potentially, and what should they know when they're getting started in this avenue? Maybe they're not a big player around for years and years.
Yeah, I think it's a great question. So my advice to anybody would be is get to know the asset class that you are already aware of. So if your career was in healthcare, or if your career was working at a manufacturing plant, the manufacturing plant, for example, I would advise that individual to take a look at the commercial industrial sector. Let that be where you're getting started. And I'm not saying invest any money. I'm just saying work yourself through the process where you're aware of the companies that would be competitors to where you used to work or where you currently work, where their locations are, what size of buildings they're in, and just get to be aware of the environment. From there, you'll naturally come up with questions as to, why does that building look like it's 60 years old? Why does this company seem to have a brand new building? From there, those questions and answers will continue down a road where you'll begin to know what you didn't know at the start. And then you can start switching asset classes. And maybe for students, it becomes the path of least resistance for them to get into looking at multifamily housing, right? Because naturally, as a student, you're going to be living in a dormitory. You're going to be aware of paying rent, the rent cycles of January 1st, May 1st, and September 1st, and maybe that's the way they get into it. So my suggestion would be to start learning the shallow water with something that you're familiar with.
Okay, so like knowing the asset class, studying it, seeing the process, and asking questions naturally about the different companies, competitors in the area. Now, when it comes to let's say someone who's interested in investing in either land development, maybe building multifamily, maybe commercial real estate, from the financing side, because you have the interesting knowledge in commercial real estate as a commercial realtor before and a builder consultant, what are things that people have to know when it comes to financing these deals, when it comes to getting started with, whether it's raising money, capital, or just financing these type of projects as well?
Well, it's expensive. I think everybody is aware that it's expensive regardless of which asset class, residential, commercial, to get started. So typically what I see is I see individuals who have successful companies that have, let's say, a 5-year history of turning a profit in their industry, being able to supply them with the cash flow to be able to walk into a lender and be able to say, here is what I've earned in my industry. I'm a professional. Here's my financial statements and here's my forecast. Instead of paying rent, I would like to own. And I think that is probably what we see happen most often, because there becomes a certain amount of space that you occupy in a building where your rent will very quickly come to the equal amount that your mortgage payment will be. And obviously that fluctuates with the interest rate, but you get to that tipping point where you say, instead of me paying X to be a tenant here, I might as well pay the same amount of money and own. And that's why you see a lot of these smaller buildings on large pieces of land really being a different price point than maybe something a little larger. And it's because they're really the gateway, the entry level building for these want and should be owners getting into the business. So
I like that you mentioned that too, because like you said, that if they have a cash flow in their company, they have a successful company, they have a certain history, 3, 4, 5 years of, cash flow, then they go to the lender. You help them with that process of funding a potential purchase for commercial real estate. When it comes to renting and owning, why should someone consider one or the other when it comes to commercial real estate? And what should someone consider when it comes to each one, owning and leasing commercial space?
It's a very good question. I think, everybody keeps using the term first principles, right? Everybody's a big Elon fan. I'm a big Elon fan. I think one of the first principles of real estate comes down to, and on the commercial sector is that is my business as I operate it, am I getting a higher return on the investment by manufacturing my widgets than I am, owning my land and accruing value by owning my building. So if I'm not going to make as much money um, by sitting in my land or on my land or operating on an owned parcel and an owned building, and I'm making way more money being a tenant, just paying my lease because I'm earning, say, what has it been in the last 10 years, 13%. I'm earning 25% in my widget business. That's really the difference. So do you want to take that extra capital? What makes more sense? Do you want to take that extra capital that's sitting in your bank and you want to put that into another assembly line so that you can have 3 assembly lines? Or do you want to take that and invest it as a down payment on a mortgage to own that land? So,
Okay. No, that's
yeah.
actually a great point because when we talk about with clients ROI, pay down, maybe appreciation at 3% or whatnot, and then looking at any potential cash flow after mortgage is paid and all the expenses are paid. Um, how do you how is it different when it comes to commercial real estate, the return on investment when you're looking at it with a client, maybe they're looking to getting into investing in commercial real estate, etc. How do you analyze a deal differently than residential when it comes to that?
Well, it's similar to residential in that we use a capitalization rate. And that cap rate will obviously fluctuate with the amount of risk, and each specific asset class will have its own risk appetite. So in Ontario, we're fortunate, or some would say not, to have the Landlord and Tenants Act, right? So for the most part, there's a little bit more risk in multifamily in the sense that, well, you can debate that, but some people would say there's a little bit more risk in that asset class. Um, if you were to take a look at a location like Cambridge, where you're really halfway between the states at Detroit and also Buffalo. So you think, okay, if I'm an industrial user, I probably want to locate in Cambridge because I'm going to be exporting to the States and I can get down to the West Coast and the East Coast of the States both. So hey, if I'm investing in maybe I'm investing in Cambridge, and with that comes also a risk assessment along with that asset class. So each of them are a little bit different. Retail obviously is a little bit higher. We've seen over the last little bit where, even through COVID, online shopping, no one's really going out and we've seen retail then be exposed to a higher risk element. So just like any other investment, whether it's commodities or whatever you're trading, commercial and to a large point, residential is all about, asset class and location.
And for our listeners here, likely familiar with cap rate, can you just explain what that is just briefly and how you find different cap rates in different markets and why it's important?
So yeah, the cap rate is basically you take your net income after expenses and then you divide that with what the value of the property. So we've seen cap rates over the last little bit get a little bit higher, and that's because money's become more expensive. So it is related obviously to the interest rate. But yeah, so typically what we've seen over the last little bit is anywhere between, some of the most lucrative tenants. So we're talking about, you know, maybe tenants that you would see listed on the stock exchange that lease space, maybe in a retail sector like a Walmart or, those stable investments, you'll have a lower cap rate because those tenants are more apt to pay their bills on time. Therefore, the investment is more stable and you're taking less risk for a lower cap rate is typically how it works. But again, math is pretty simple. Take your total revenue, net income, not total revenue, but your net income, and then you divide that by the value of your property, and that's your capitalization rate.
Okay. That's important because I remember we had a listing in out of town. It was up north, and you mentioned if the market's smaller there, the cap rate's got to be higher, so therefore the property's worth less than it would be in a Toronto where the cap rate's a little bit, more pressure on the cap rate downwards, right?
I think that's a great point. And so I guess my personal opinion is I come from a small town, and when I have opportunities in that town, it's north of Toronto, Perry Sound, we will hear lenders give a negative connotation to the level of risk in smaller towns. And I think it's just typically because of the lack of knowledge. So, to your point, yes, the market reacts in a way to smaller populations, rural areas, higher risk. That's just a natural correlation. But I think what we have probably seen in our careers is that a lot of time, the people that know those towns, those rural areas best, they are a lot more comfortable lending money and investing money in those communities that they grew up with or work in than they would be buying something on Bay Street or on Adelaide, downtown Toronto. So it's an interesting observation, and I think that if there's any sort of aha moment for someone who wants to invest in real estate, commercial or residential, is that you just have to know your spot. You have to know if you're confident in your spot, and it doesn't have to be urban. It doesn't have to be downtown anywhere. If you're comfortable in it, um, that's all it takes for it to be profitable.
Okay. Thanks for sharing that. I think that's really important to understand the difference, like you said, location as well as the difference between cap rates, the different markets, how it affects value. When it comes to a lot of buildings that have been on the market for a while or they're just coming up for sale, we're finding a lot of baby boomers selling their properties. Kids don't want to take it over. They want to liquidate, free up assets. These sellers ideally want to sell. The tenants have been there for 20, 30 years. What strategy should an investor look at when it comes to a fully tenanted building? Let's say, 5 cap rate in Kitchener at this time, recording potentially it's a rough idea. And the rents are, let's say, the net operating income is 20,000 a year, really low. What should someone consider when they're, is this still a viable strategy for them to to have a process when it comes to financing this, when it comes to creating a plan for looking this as a potential investment and potentially looking at the upside down the road, because there's a lot of these buildings out there.
I think yeah, this is a great question. I think a lot of people look at this and have a little bit of recency bias and say, hey, the market's been so good for the last little bit. We're going to buy it and we're going to be profitable and make money, and we're not going to have to worry about anything. But we have to remember, when you're buying these asset classes or you're buying this building, this hypothetical building in Kitchener, if it is an undervalued asset, meaning you feel like that there's room in for an escalation in rent with your existing or new tenants, you have to build that into your strategy. So we're existing in an environment where commercial real estate listings, up and until I would say maybe last summer, where you would never see someone sign a 6 month listing for lease. You wouldn't have to. You would simply need to do a couple of months, and owners kind of got familiar with that and wanted everything yesterday, and agents had to react. But the fundamentals of the industry is that in order for you to get the highest, best tenant in there, it really should run through a proper marketing process. And that marketing process should, I would suggest, be at minimum 4 months, maybe even 6 months. And it should start with detailed goals of exactly where you want your rents to be, what type of tenant that you want, and any of the agents that would come in and want to earn your business should have the market information to tell the landlord, this is what you should expect. And then what you do is you build the leasing cost, the commission cost to the agent in there. and you roll out a marketing campaign. And I think the most important part that is lost on many of the agents to this day, with the exception of some of the top few, is the ongoing collection of data and dialogue and reporting. I think the reporting to your client is the most important thing. Sitting in front of them every day or every month, face to face, saying, this is what we've seen, this is who I've talked to, this is what their comments are. Here's the deals around your visit building that have been done. This is what they've been like, all of that information. When you get into a market that's so darn hot, you sort of, people sort of forget what the proper protocol or why we actually perform those steps that were so crucial when the market was different than it was and it is now.
Yeah, that is an interesting point, because it covers up mistakes, right, in the market, where the service, right, the aspect of, you have a seller, you're providing a weekly report, like we'll provide hit counters and show them how many people viewed, clicked, what's the feedback, what's been a recent sale. If you're planning to go to the market, we should have another analysis done 2 weeks before. So you're right. I mean, whether it's commercial or residential, there's a lot of foundations in there when it comes to communication, collection, making sure people are informed, especially investors that are looking at the numbers. That's really important.
Well,
So
actually, Sam, and it brings me
yeah,
to just something I thought of now, to a question you asked earlier. So, if someone wanted to become a real estate investor, or who wanted to invest on another asset class and wanted to get into commercial, they should really base the experience on any time they bought and sold their home. Because if they had used yourself, or they've used someone who has a very high standard of quality and service, um, virtually they've taught you most of the steps that it takes to be successful as an investor. So they're not that different, actually. So very good point.
yeah, thanks for sharing that. I think that's key, because I do see the level of detail you've provided with some of our clients too, and I will say it's been very impressive. I'd like you to share one example, maybe obviously leave out names, but an example where your team is a little bit different in financing deals, understanding their portfolio, understanding how to unlock money to make a deal happen, whether it's flip financing, whether it's short-term financing, whether it's understanding the client's goals. Can you kind of walk us through a little bit of that to kind of highlight for us about, what you provide?
Sure. Yeah, I think that's probably the I don't know if it's fun. It's certainly the most interesting. It's definitely the most rewarding. Um, we're not going to specifically name the client, but
Right.
obviously, um, different type of borrowing scenario. And to make a long story short, it wasn't something that fit into any of these monoline lenders that we see, that we all have debit cards with. And I mean, at the end of the day, there is a vast wilderness of lenders that are out there that all specialize in products that could help anyone in any asset class or any investment scenario. So this particular scenario required that we needed someone to believe in the investment that the person was looking to get some financing for. And it just so happened that both of them were from the same part of the world that was in Canada. They both had families that had immigrated. They both had the same industrial background, which was unique. And both at times they had members in their family that where someone took a chance on them, and that made a lot of difference. And it changed their life, and that's how this deal was. The fundamentals have to be there. Don't get me wrong. If the fundamentals aren't there, no one's just giving away and taking risks because if it's a feel-good story, they do it. But this certainly played into it, and I think that similar to you and I, we do business with people that have the same values as us. It's people that are friends and share the same values, and you enjoy being around them, whether it's about business or not. So that was one of the most recent ones. It just happened to be a pretty large one as well. And you're happy about that because everybody sort of wins, and it's a long-term investment.
Yeah, you also mentioned earlier too, like you take a long-term relational approach. Tell me a little bit more about that and how where that shows up, because I don't think that everybody in the financing world does that when it comes to their clients, or whether it's repeat clients, it shows to your experience, but or just people who are getting started with you. Um,
Well, I think that maybe the younger Matthew would probably answer this question a lot differently, right? Because I think that coming out of university with $40,000 in student loans, and I'm trying to just get
yeah,
someone to give me a call to
commission
give me
breath,
a
right?
chance. I'm trying to earn money. But I mean, listen, it's all about relationships, right? Are transactions are really based upon a finite timeline. They're monetarily focused. It's about getting the biggest bang for your buck in the shortest time, and we've all seen it. There's a place for them, right? There's insolvency trustees that come in, they have to liquidate the assets of the building to pay back the shareholders that invested in the company that went broke. So there's a place for that. Um, I think you and I both agree, though, that a relationship is quite a little bit different than that. The relationship is about adding value, and as you get older, I know I'm a little bit older than you, Sam, but we are similar in the sense that
Yeah.
we've been doing this long enough. We've been able to be around, and fortunately, like it's really about luck and listening, being around people at the right time, and just being able to soak up all the knowledge, and then turning that knowledge into an interest, and then being able to provide that knowledge back to clients by way of insight. And once you find clients, or you're having a discussion with someone who may want to be a client of yours, once they express what their goals and preferences are, and if you have value to add to them, you really want to do it in a way that you're both learning, and you specifically are rewarding them with their best interest. And it comes down to loyalty and trust and value. And it's not something that is about a transaction or a date on the calendar. It's about, something much larger than that.
Yeah, you learn that really well. Like, I mean, there's a great book that I recently read, Trust Works, and like the ABCDs of trust, right? And connecting is huge, right? That's why some people will prefer still a phone call, and they want to connect, and they want to know that you're sharing about your experience, and that as a person and as a real estate investor, and your story as well. I think that's important. And then doing what you say you're going to do, right? Being able to be reliable, being able to show that you've funded other deals, you've helped other investors accomplish their goals in different scenarios. It's huge. I mean, it's bigger than any mortgage, person who offers random gift cards for referrals. I mean, that doesn't work. I think it's relationship. It's providing great service. It's making sure that the client serviced, and that the realtor who's referring gets updates. And I will say you've been really great with making sure that those updates are provided. It's really professional. And you're an extension of that person, right? So you're providing yourself in the best light, right? When it comes to values or how you show up with those investors. So shifting gears a little bit, when it comes to commercial real estate, where do you see that going right now? I know that with the landlord tenant rules and guidelines, it's been more challenges in Ontario. We have lots of people that are investing in other provinces, people moving to other provinces. I have sellers that are doing the same now, and they've told us what they're doing. Um, where do you see commercial real estate as far as, is there more interest now? Are people, purchasing more car washes, more vending machines? What's going on there? Tell us about what you see is happening. Is there more mixed use properties? I want to know.
Well, it's a great question. I think it probably would be better answered by, some of the showstoppers that are doing these deals with
Right.
some of the big four. And I'm not going to name drop, but again, there's some guys out there where I've been lucky to be around and be in earshot. So, what I would say, my personal opinion, and I don't know what the exact stat is for this quarter, but I do know a year ago today, the GTA had the lowest industrial vacancy in all of North America. So if you think about that, and you think about it also being, I think, the fourth largest by way of total industrial volume in North America, lowest vacancy, and that vacancy rate isn't like 1% or 2%. I think at that point it was 0.4%. Now, since that's happened, we've seen almost 5 million square feet of new industrial space come on board. It's been a while since I've looked at it again. The last 6 months of my life have really been focused on mortgages. And a lot of my guys have gone into land development as opposed to spending a lot of time in industrial still. But industrial really feeds the commercial market in Canada. We have been long sought at as a manufacturing hub up until NAFTA. The competitive advantage of the dollar value and the cheap labor really helped. Again, the location of Southern Ontario is spectacular. So and I think, I'm not a big political guy, but you got to think that, it's been quite stable versus maybe other first world countries as far as leadership is concerned. So my gut feeling is that we're probably more well positioned in Ontario and specifically where we live than most. And I think it's certainly a positive impact. The one thing that I would be concerned about is that if there's anything that has been concerning, and when I say concerning, it's just new and I'm not familiar because it's never happened before, is that a lot of that industrial space, like we've seen specifically in Cambridge, 1 million square feet for Amazon. I think people are aware of that one. When you start having the e-commerce substitute in for manufacturing, that's really a different animal altogether. So when we saw COVID hit, people are ordering everything off Amazon. That has to come from somewhere. And that demand going through the roof has basically spiked these massive distribution centers. And those distribution centers are a part of those figures that I just gave you. So not necessarily a red herring or, something to be overly concerned about, but big enough to notice that it's there and it's having an impact. And will this continue, or what impact will that have in the future? And I'm not sure the answer to that.
No, it's an interesting point though. Like, so for example, let's say there's more imports from other countries. Is manufacturing and industrial becoming less available or less in demand here, or is there still demand here because of there's still a balance of that import and there's not as much, there's still things being manufactured in Canada or in our area in Ontario, in Canada as well?
Well, yeah, well, remember, the large, well, I don't know if it's the largest because again, I don't have the stats in front of me, but we're a manufacturing hub for auto parts, right? So first and foremost, that skilled manufacturing process. We have the big three that are all around here. And then we have, your tier 2 suppliers like the Linamars, the other ones that, supply a bunch of different manufacturers. So that's a huge chunk of manufacturing that goes directly to the States and fuels the car industry. So it's difficult to kind of speak to that whole industry while removing that. But I will say that each sector needs to be evaluated sector by sector. And I know it's difficult to get things into the country that are manufactured outside without adhering to all the CSA standards. So it's a great question. It'd be a good thesis. I don't know the answer, but maybe one of our up and coming real estate economists from U of G's real estate program or Ryerson's real estate program can fill us in on that.
Well, I think it's good because you're really connected to the commercial world as well from previous. You have a lot of contacts, so you're in the know of property, asset class. Some of the takeaways so far on this part that you just mentioned is understand your asset class, study it, focus on it, find the questions as they come along, and then making sure that there is still a demand for industrial because we supply to other countries or other areas as well. Correct? When it comes to
I think that's a very good takeaway. Yeah, I think that those are all good points. I get a little bit wordy because the way that I studied economics, so I naturally overthink all of the variables. So I do get a little worried, but yes, I think that you've unpacked that quite well.
Yeah,
Thank
they
you.
definitely, we're not, yeah, we don't, we're not going to get the weeds too much because it's definitely a lot of great things to unpack though, and a lot of knowledge for our listeners too. Now, you had mentioned that you had overcome some health challenges, some health situations, and how did that shape the person you are today when it comes to how you serve the community, our clients, your clients? How does that, how does that show up now when it comes to, how you show up today?
Well, I don't know if it would have naturally happened without getting sick, but so for those who are unaware, and I mean everybody in this country, everybody around the world's been touched by cancer in their family one way or another, and I would know no different than that. Was just out for a run in 2018 May, and something didn't feel right, and it turned out to be stage 4 non-Hodgkin's lymphoma, and great care at the Guelph General here, and then at obviously Kitchener Cancer Center in Travinsky. Um, Went on chemotherapy, was able to battle back, and I've been in remission for over 5 years now, 5.5 years. So how did that change my life? I think that anybody who goes through that, and I think you can take it one or two ways, right? You can either let it knock you down because I'm not running those 5Ks at the same time anymore. I look different, but at the end of the day, mentally, going through that and being able to have the empathy, I think, of so many other people that have gone through that. I mean, I'm not going to get emotional now, but it would be very easy because there is a gong that's at the Kitchener Cancer Center, and it's right at the front door. And when someone has done their chemotherapy treatment, they get to ring that. And I remember walking in there for the first time, just being like, not even appreciating it, just not because you're just so new and it's very overwhelming and it's very busy. But then after you go through your 14th chemo session or your 15th chemo and it just wears you down, and all you want to do is ring that gong, and then people, children, adults in their 70s, ringing that, and it just almost being like a second chance. So anytime that you've ever ran into somebody that gets a second chance, you do things a lot differently. You don't take anything for granted. You listen more. You pay attention to the little things. You spend more time with your family. So yeah, it's. I hope that it's changed my business life for the better. But really, I wouldn't care as long as I'm just a better person. I think
Yeah,
that's all that matters.
that's what I agree. I think those things, you said, created empathy, connecting with others, serving others. I think it's definitely shaped your values and how you show up in your business today. So I think it's incredible. So as we kind of wrap up, is there anything that you'd like to add? You want our audience to know about, who you are, what you represent, and then we can maybe end it at a couple more questions.
Well, I think that the only thing that I would say is that you know, if when I was getting into the business, and I was a research assistant at JJ Barnaky Whitney in Waterloo, uh, there was no CoStar, there was no real internet to go in, and it was all about just watching transactions and finding the smaller data. And what I'm trying to say is that the commercial and residential real estate world to me was just some overwhelming, non-understandable industry, and I just could not wrap my head around it. And what I think I want to say is that the one thing about the consultants and clients that we have is that we really unpack that. Like, we really simplify things. And as much as some of the explanations or the comments today and the feedback that I've given might seem a bit, you know, in depth, it's just that it really isn't. It's just I'm trying to get the valuable little pieces and nuggets out there for everyone. And it's exactly, I would compare it similarly to like going on the mortgage side of things, right? So you go into your bank and you have no idea. You just know that, Scotia's been giving me a debit card for the last 15 years. They must give me a mortgage. And then when you understand, after you buy your first house, is that, Scotia only, or poor Scotia, lender A only has one or two products, right? So then you go, well, wait a second, I don't want to have this product. So then you go to a mortgage broker and you go, oh, wait, there's 150 products that are cheaper that actually give me what I want. So again, it's not that complicated is probably how I would say it. And yeah, just reach out. I have this cool little thing. It wasn't my idea, obviously, but on my website that says click for a coffee, and just click it and it sends me an email and let's get a coffee. And I think maybe more often than not, Sam will join us.
I was gonna say, what can they expect in that coffee session? And any key takeaways from your blog you wrote, we can link it in the show notes.
Oh yeah.
That, you know, there was a lot of great. We're not going to get into the weeds about rates and all that because things change. You know, it's kind of macro level, but just any takeaways on that?
Well, it's cool. I mean, I'm not a very good writer. Sunday Doc Read is the blog that I write. It's on my LinkedIn. It's on my website. People seem to love it, and it has a little tidbits of industry news and nuances. I think there was a story, the last one, about people just this old couple just gave up and bought a boat instead of dealing with mortgage rates, and it found out that it was more cost effective, and they
Yeah.
went around the world. So yeah,
Yeah. That's cool.
um, check it out. It's pretty cool, and I think it is. And excuse the grammar. I do the best I can.
Well, it's great actually. And yeah, you know, we're always learning, like when we're talking to our clients, and it's on constant feedback and interaction of what we could do to iterate and create better content. We're asking, you know, what's your biggest challenge as a homeowner or as an investor? Because we want to understand what the market's saying right now. What do they need? What is it that we can do to help, you know? And I think having someone like yourself on, your knowledge in, you know, commercial real estate, your experience, your communication, working with investors, being an investor, being part of that process, and also understanding the potential of future properties because people are starting to want to, you know, develop their properties and they purchase. I think there's a lot of skills there that are very helpful, and it's helped us as well when listing homes or helping investors, you know, make the right decisions. So just want to thank you for that. And we'll put all your information in the show notes. Thanks for being a partner of our show here. And if you have any help needed with your project, Matt's a great guy to go to. So
Well, and let me just say as well, as someone who's a fan of the channel, and then obviously a fan of yours and the Affluence Group and everything that you do, I think one of the things that on behalf of the community we really enjoy is just the authenticity. So thank you for that. And yeah, I think at the end of the day, I think we're just two people that really enjoy what we do, and if people want to chat about it, they just reach out, and you know, what's the worst you can get out of it is you get a friend. So
absolutely, I love it, Matt. Well, listen, it's been fantastic having you on. We'll definitely obviously have many of these great conversations, candid or not. And thanks again for all your time.
thanks.